Good afternoon, you're watching Midcap Radar. I'm Sonal Bhutra and with me today is Ekta Batra. Ekta, good afternoon. Well, we are seeing some recovery in the markets. The Nifty has recovered around 70 points from the day's low. It's sitting with cuts of around 63 odd points. And we have Asian Paints numbers flashing for you at the bottom of your screen. And as far as the net profit is concerned, it is looking like a big beat. Net profit has come in at 1,036 crore rupees, which compares with a poll of 850 crore rupees. Even in terms of consolidated revenues at 8,607 crore rupees. It is. It looks like a big beat. Of course, we'll need the EBITDA numbers to figure out what higher crude prices meant for the company. They've been talking about taking price hikes, but definitely volume and the number in terms of margins is something we'll be watching out for. For now, it looks like a beat as far as revenues and profits are concerned. And we'll get in Mangalam in just a bit to understand what the numbers look like. Even the EBITDA number at 1,556 crore rupees is higher than the poll at 1,350 crore rupees. So looks like a top-down beat. And that is something that the street is liking as well. The stock has spiked. But we do have Mangalam with us who will tell us what he makes of the first cut.
Well, the first cut is, it's a strong beat as we're looking at these numbers for Asian Paints. You have a big jump coming in as far as the net profit is concerned. The margins at 18.1%, much higher than street expectations. In fact, the revenue has been the highest or has beat even the higher end of, the analyst expectations. And this time around, of course, the numbers were expected to be good on a year-on-year basis. And that's primarily because the same time last year, we did have the second wave of COVID. I'm looking at the management commentary here. They are saying that there has been a strong volume growth. The quarter has seen double-digit revenue growth in the international business.
Registered in the quarter is one of the highest in the last 6 quarters. So
in the last 6 quarters, it is understandable because, the last 6 quarters, the numbers
that's what the management
that we saw. Yep. So I'm just trying to figure out if they have any, sort of quantitative data that they're giving for the volume, because the street was working with a volume growth of anywhere between 24 to 26 odd percent. But suffice to say that if the paint prices have increased by around 25%, and we've seen the company's sales increase by about 60 odd percent, and even if you account for some sort of realizations lowering, being anywhere between 15 to 20 odd percent, that makes the volume anywhere between 35 to 40 odd percent. And that is a massive beat, and that's the big number that we're looking at. Volumes for Asian Paints in this quarter could be anywhere between 35 to 40 odd percent, and it's leading the big beat that we're seeing. 8,578 crores on the top line, higher than any of the estimate that we had on the street. The profits, a big beat, and the margins at 18% as well is a big beat itself.
I just want to add, Mangalam, we have some commentary from the company, so maybe we can pull up the quote plate as well from the MD and CEO, where the volume growth, like I mentioned, is the best in last 6 quarters. The business also registered a robust 4-year compounded growth rate in volume and value terms. Auto OE as well as general industrial coatings business delivered strong growth. While the persistent inflationary environment continued to impact gross margins, they delivered healthy operating margins with a strong push on premium and luxury offerings. So that's the reason why you're seeing that kind of margin come through, 18%, because there's been a strong push towards premium and luxury offerings. So that's sort of offset the inflationary environment that all the companies
that's something that the management had guided for earlier as well, because of the price hikes that they've taken. The lower end of the spectrum has seen some demand being postponed. We'll just pour through some more numbers. Meanwhile, we do have Abneesh Roy with us as well. Abneesh, these numbers are definitely above street expectations and above your own estimates as well. What do you make of the performance that the company has made, and do you have any sense of the kind of volume growth that there could be, because standalone revenues have grown by almost 60 odd percent?
Yeah, thanks. So 4 key things. Clearly, after Hindustan Unilever, this again shows that the market leader is gaining market share in hyperinflationary times. In terms of volume growth, I will agree with the range you have put out. We'll wait for the management commentary, but my sense is it should be broadly in the range of 35 to 40%. Given company had taken further 2 rounds of price hike in Q1. Third, of course, is we will see now some benefit come in H2 definitely, because crude oil prices have come off sharply from $138 to now $107. And also titanium dioxide should correct because there is a global recession fear, and China especially, there is a concern on the overall slowdown. So we have seen FY22 also very strong. Street was concerned that on such a strong base, price hikes will be difficult and volume growth will be difficult. But I think these are excellent numbers, and this goes on to show that Grasim will find it extremely difficult to take market share from Asian Paints. So we remain quite positive, Braveheart, with a target price of 3690.
You take that point, and the street is taking note of that as well. Yesterday also it was one of the gainers in trade in an otherwise wobbly market. The stock has rallied almost 15-16% in the month of July itself. It's still about 10-12% away from its all-time highs. Valuations are not particularly comforting, but that's not how they've been in Asian Paints trading history over the last 4 or 5 years at least. Naveen Kulkarni also is with us. Naveen, 35 to 40% is the rough volume estimate that we can decipher back of the envelope calculations. What do you make of these numbers, and do you think that them having gained the 150 basis points market share has done well for them? What's your call on the stock now?
Yeah, so overall, this is a blowout quarter for Asian Paints, considering the volume growth is a very, very strong number, much higher than what we were expecting. Even EBITDA numbers are very good, very much stronger than what we were expecting. In fact, the margins are also better than what we were expecting. Profit growth is, of course, at least 20% higher than what we were penciling in, right? So overall, extremely strong set of numbers from Asian Paints. And on top of that, the gain in market share is the icing on the cake, right? So there is nothing, I would say, that to choose in terms of which is not working for Asian Paints at this point in time. Of course, this is a very, very structural long-term positive. Very, very strong set of numbers, I would say.
Okay. Abneesh, I wanted your sense on the margin trajectory, because this quarter was when input costs were high. Now we are seeing input costs soften. Plus, you're of the opinion that the market leader is going to continue gaining market share. In that scenario, what is the kind of margin trajectory you're expecting? What do you think would be the exit rate for FY23?
Yeah, I think they should go back to their peak margins by the end, given they have taken strong price hikes and we have started seeing commodity deflation everywhere. Palm oil is now at a 13-month low. I will not be surprised if a lot of the raw material of Asian Paint in the coming month also correct very sharply from here also. So definitely, I think we should also be cognizant of two more things. Rupee depreciation, that is adverse because most of the raw material is imported. Second is there is a 2 to 3 month of lag. A lot of companies have built up inventory given there was a concern that crude will go to 200. So let us take that into cognizance. But your question, FY23 and FY24, we see peak margin band coming back. So we definitely see very strong margins in FY24 if there is no more geopolitical risk. But as of now, the probability seems low.
Well, we'll await the management commentary on that and, the way demand is likely to pan out going forward as well. We also have Abneesh Agarwal, who's the head of research at Prabhudas Leeladhar, joining in. Abneesh, unequivocal beat for Asian Paints. It's a big move that we're seeing on the stock as well. It's well off its all-time high, but at the same time, valuation's not comforting. A couple of points that, we'd like you to focus on, or your thoughts here. These numbers are good. They're gaining market share. The trajectory for the next couple of quarters, if the raw material prices stay stable, looks good as well. But then thereafter, there is a lot of supply coming in the industry. So to that extent, how do you view a long-term investment in Asian Paints?
Okay, so you see the main hindrance or the factor here to be considered is what Grasim will do once they enter full-fledged into the, you can say, the paints market. Now, if you look historically on a, say, consolidated basis, except in the years where you can say raw material prices were too low, they used to have 40 and 42% kind of a gross margin. So I won't be surprised that if Asian Paint settles for 1 or 2% margins lower than what they have been making in the last 5-7 years. So that is a strategy which Asian Paints can, I would say, follow very easily. So in my sense, looking at Asian Paints going back to 21-22% EBITDA margins, that might not actually, you can say, suffice, at least in the near to medium term. Now, as far as your long-term investment in the stock is concerned, you see, Asian Paints will be a survivor. Even if Grasim comes into picture, they go aggressive, they try to gain market share, then Asian Paints, by virtue of its scales, by virtue of its market share, product depth and width, it will definitely be a winner. There is absolutely no doubt. But if Asian Paints goes aggressive to save its market share, to save its turf, then the smaller players, regional players, and even I think the weaker players among the large ones, they will also be at risk. So from that viewpoint, I think given the current valuations, Asian Paints re-rating looks slightly difficult. But yes, the company will continue to do well otherwise.
Well, that explains why, Asian Paints, while it is doing well, usually what would happen in a non-Grasim entry scenario is that Asian Paints' good performance would reflect in the stock prices of all the other paint companies as well. We have seen a bit of a spike in Berger's share price, but it is still under pressure, not as much as the kind of gains that we're seeing on Asian Paints. So Asian Paints has moved to the high point of trade. Berger Paints has spiked a little, but has still been muted because the street believes that the larger player out here has more market share to gain. At the same time, will be a survivor in times when we will have some big challengers coming in too. We were referring to the management commentary out there, and they've spoken about good performance in their home improvement business too. Earlier, the management had said that home improvement could triple from here in terms of its contribution to the revenue. Abneesh, do you have any sense of the kind of value that you would give to their home improvement business at some point as well, once it becomes about 8 to 9% of their revenue?
Yeah, I think that is clearly going to happen. If you see even in FY22 annual report, they have said that the waterproofing revenue has recently doubled. Their kitchen and bath business, if you see, they are setting up second facility. So in waterproofing, currently we have Pidilite as a strong player, and then there is space definitely for Asian Paints to be a very strong number 2. So I would say that this will address any concern of Grasim, because Grasim, if you see, will enter maybe after 5-6 quarters. But in consumption, we know it takes a lot of time. So I think the P multiples of Asian Paints will go back to the peak because of the diversification which Grasim is doing. And also Indonesian arm has also scaled up well. So I think Asian Paints should not be seen as a pure deco company. It has 3-4 other drivers which will address the Grasim derating, which can happen for Berger, Kansai, Nippon. Nippon is not listed, but Kansai, Akzo, etc.
All right, take your point, Abneesh. Thanks a lot for joining in. So that is the quarterly performance of Asian Paints. It was a good quarter that the street was expecting this time around from the paint leader. The company has gone ahead and beat expectations on that front as well. The revenues have grown 54% as against expectations of 35%. The EBITDA as a result of that has grown higher than that, and the net profit has grown 80%. The street was working with a number of around 52 to 55 odd percent. The EBITDA growing at 70% above expectations as well. That means that the margins, which were likely to be around that 17.5 or 17.7% mark, have gone back to 18% plus, and this is in line with the management's guidance of 18 to 21% range that they will be working with. A 25% price hike, well, the street takes that because the volumes can be anywhere between 35 to 40%, much above street expectations of 26 to 28%. As a result of which, the stock has moved to the high point of trade.
Okay, all right, Mangalam, thanks very much for that. So that's on Asian Paints stock at the high point of the day, up around 1% reacting to its Q1 numbers, which were better than expectations. Volume growth probably above 30% for the quarter. Take a break, but